You know how we used to wait, like, forever for a bank transfer to go through? Days. It's
Yeah.
crazy, right? Get ready to add that to the pile of quaint things because FedNow is here. And, well, people are saying it's going to totally change things. We're taking a deep dive today into whether this instant transfer future is going to be as awesome as it sounds or, well, if it's more like setting ourselves up for a major financial faceplant.
Yeah, that's the big question lurking behind all the hype, isn't it? And, we found this fintech expert, Joseph Raczynski, and he's saying it could really go either way. He actually makes some really interesting points, even some kind of unsettling ones.
Okay, so unsettling, that's never a word you want to hear associated with your bank account. But before we get to the scary stuff, let's ground this a little. What exactly is FedNow? I mean, every time I hear about it, it's the future of banking, but does it always have to sound like something out of Star Trek?
Well, there's a reason people are excited about this. Imagine, right? It's 3 a.m. You suddenly decide you absolutely need those crazy expensive imported cookies, and boom, paid and done, even though your bank is technically closed. FedNow makes instant transfers like that possible 24/7, not just for late-night cookie emergencies, but for businesses, banks, you name it.
So, like Venmo, but for when banks need cookies at 3 a.m.
You got it. But on a much bigger scale.
Mm.
And that's actually where Raczynski's take on this gets really important. He says, and I think he's onto something here, that this isn't just like a small upgrade or anything. It's a fundamental shift in how the whole U.S. financial system works.
Okay, fundamental shift. Now, I'm definitely intrigued, but maybe grabbing my metaphorical helmet, too. What are we talking about here?
Well, so Raczynski argues that this is like the first step towards something much bigger. CBDCs, central bank digital currencies. But actually, even if we don't go down that whole rabbit hole, think about this. What happens when you combine the speed and the reach of something like FedNow with how fast information, and let's be honest, panic, can spread online? It's like instantaneous,
Yeah.
right?
Oh, yeah, I see where you're going with this. So you're saying FedNow could be like, what, pouring gasoline on an already out-of-control fire? Except the fire is our financial system.
Yeah, that's a good way to put it. And that actually leads perfectly into one of Raczynski's most interesting and, frankly, kind of unnerving arguments. And it all has to do with this idea of bank runs in the digital age.
Okay, hold on. Bank runs, isn't that something that only happens in, like, old movies, right? Silicon Valley Bank, SVB, that was, like, everywhere for weeks. But wasn't that more about, I don't know, a bank making some bad bets and then it all just kind of blew up?
Well, yeah, risky bets were definitely a part of it. But you know what really shocked everyone, even like people who follow this stuff for a living? How fast it all happened. Remember those classic bank run scenes? Lines down the street, everyone freaking out trying to get their money out.
Thankfully, I've only seen those in movies, huh?
Exactly.
Goodbye.
But with SVB, it was like that, but digital and like 1,000 times faster. News starts spreading online that the bank might be in trouble, and boom, everyone's on their banking apps hitting the withdrawal button.
So instead of a panicked mob, it's like a million panic fingers?
Yeah, basically. Or someone opened a digital floodgate and all the money just whoosh. And that's exactly where Raczynski draws this really direct line between like SVB and what we're talking about with FedNow. He says this kind of super fast digital bank run, all driven by social media and these instant transfers, it could become, well, normal, the new normal, and a much, much bigger problem.
Because with FedNow, everyone will be able to, like, move their money out in seconds, right?
Exactly.
Yeah.
Imagine the SVB situation, but instead of just some people being able to transfer their money instantly, everyone can. It's like that flood we were talking about. Now it's a tsunami. And get this, Raczynski says that those safeguards, the ones that have been in place for decades to prevent bank runs, he says they totally wouldn't work in a FedNow world.
Oh, great. Now I'm really starting to sweat. So what kind of safeguards are we talking about? And why wouldn't they work anymore with, instant everything?
Okay, so think about it like this. Banks, right, they don't actually keep all your money just sitting there in a vault. They have this thing called a reserve requirement. It's like their rainy day fund. A percentage of all their deposits that they have to keep available just in case a bunch of people decide they want to take their money out at the same time.
Yeah, that makes sense. Keep a little something extra just in case. So what's the problem? It's not working.
Well, that's where Raczynski drops, I think, his biggest bombshell.
Yeah.
He's saying that the reserve requirement right now, which is usually somewhere between like 3 and 10%.
Wait, hold on. Only 3 to 10%? That doesn't exactly sound like a super strong safety net.
You're telling me. And Raczynski says that in this new world we're talking about with FedNow and instant information spreading like wildfire online, that 3 to 10% wouldn't even come close to preventing a massive bank run if everyone starts to panic.
So, okay, if the safeguards we have are basically useless, what are we supposed to do? I mean, I'm guessing Raczynski has some ideas.
Oh, yeah, he definitely does. And get ready for this, because his solution is, well, let's just say it's pretty intense. He says we need to completely rethink this whole reserve requirement thing. Remember how we were talking about it being like a rainy day fund for banks?
Yeah, a pretty tiny one, it sounds like.
Exactly. And Raczynski's point is that with FedNow, we need to be prepared for like a full-on financial hurricane, not just a little rain shower. So he proposes something way bolder. What if we just massively increase those reserve requirements? Like really significantly. He even goes as far as saying, why not a 1.1 ratio?
But on, you're saying banks would have to keep $1 in reserve for every single dollar someone deposits. I mean, that just seems extreme. Wouldn't that basically turn banks into like giant useless vaults of cash? What about lending? What about, the whole point of a bank?
That's the trade-off, right? And Raczynski acknowledges that. He knows that if we went that far, if we really increased reserve requirements that much, it would completely change the financial system. It could mean way less money for loans, probably slower economic growth, the whole deal. But his argument is that, well, maybe that's the price we have to pay for stability, especially in this new world we're talking about with instant transfers and everything.
So it's like choosing between, I don't know, a financial system built for speed or one that's built for safety. Is that what he's getting at?
Yeah, you got it.
Yeah.
And honestly, he makes a pretty convincing argument that maybe in the long run, having that real security, that knowing things are stable, maybe that's worth giving up a little bit of that instant gratification we've gotten so used to.
Okay, that makes sense. So, big picture, for everyday people like me, what does all this mean? Should I be like pulling all my money out of the bank right now, buying a mattress with extra strong springs?
Uh-huh. No, I don't think you need to go that far. It's important to remember that Raczynski isn't saying that FedNow is like inherently bad or anything. He's just pointing out the potential downsides, the risks that come with this new technology. Risks that, honestly, we all need to understand and figure out how to deal with. The future of finance is not just about what banks do or what the government decides. It's about us, the choices we make, how we manage our own money, how much risk we're comfortable with, that kind of thing.
So, it's kind of like FedNow is this really, really fast car. Yeah, it's exciting. It could get us where we need to go a lot faster. But we probably shouldn't just, hit the gas and ignore the speed limit or forget to wear a seatbelt.
Now, that is a perfect analogy. I love that.
Yeah.
We really need to be asking ourselves, how much are we willing to bet on speed?
Yeah.
And what are we willing to give up to make sure the ride is a little smoother, even if it's a little slower?
It's a smoother ride. Yeah, I like the sound of that. Well, there you have it. We've taken a deep dive into the world of FedNow, explored the good, the bad, and the potentially ugly. Hopefully, we've given you some things to think about, because one thing's for sure, as we keep moving towards this future where everything happens instantly, being smart about your finances and making informed choices, well, it's more important than ever. So keep those questions coming, keep diving deep, and until next time, happy and hopefully safe banking.